Okay, Mr. Kennedy, you're welcome to class. Okay, so let's start from where we stopped. Good evening, Mr. Kennedy. Welcome to today's class. While we are students, we should just do a little recap on what we have done in the last class. In the last class, we talked about IAS 1, and we're able to look at the objective, the scope of the IAS, the reason why we have IAS 1, which is the presentation of financial statement. Also look at the component of financial statement, where we mentioned that we have the statement of financial position, statement of profit or loss account, we have statement of changes in equity, we have statement of cash flow, we have noted the account, accounting policy, and the rest. And we said these are the things statutory, the word 5 statements are statutory required by the law. Why we have other reports according to IS1. Example of them are environmental, social report, director's report, and the likes. So, and we look at the format of the statement of financial position and statement of financial performance. And we said the another name for statement of performance is actually what we know as profit or loss account or income statement, or what we know as statement of profit or loss account and other comprehensive income. And I said that under comprehensive income is not in your syllabus, so you don't need to worry about that now. But I gave a little explanation on that. So we also look at the treatment on how to adjust taxation, where we said that taxation that we do normally in our statement of financial performance is an estimate. It's not an actual. So when we make payments, which means that all the allowable, all what we have deducted back, some of them which are not allowable will be added back to it to get our own profit so that they can tax it. And so whenever something like that happens, there are two scenarios that can happen. We can either have what we call over or under. So when we overtax ourselves, when maybe we expect to pay 150, but we have calculated for 100, we say the following year, which is the current year, the 2019, the current year, that adjustment must, but the difference must be added. If it's lower, then it means that the difference must be added. But if we have overestimated, it means that the more figure that we have stated should be subtracted from the current one. That way we did it, and we said that that's actually going to affect our statement of financial position, performance. And we said under the statement of financial position, we start with firstly with the opening balance. Secondly, we start with the tax for the year, and tax for the year is one that we have initially adjusted. Then we deduct the amount that we pay during the year from it so that we can get our closing balance for the tax. Then as well, and I talked about also that tax are actually paid by companies. Company income tax are paid by companies, but why the shareholders or the partnership, they pay their tax is on the amount paid to the directors, to the owners of the business. For companies that have shares or there's different from partnership and sole proprietorship, they pay their CIT based on the profit that they have generated over time. So then we now talk about issues of shares. Now, issues of shares that I'm talking about also, we have to say when an entity issues ordinary shares. So we have when an entity issues ordinary shares. So we continue for where we stopped in last class. That's trying to highlight that now issues of shares. So okay, this is where we are right now. So we have issues of shares. When an entity issues new ordinary shares, two things are actually involved there. Issue shares becomes a part of equity. It means that, for example, now we have 100 shares in our company right now, and we now issued under 20 shares. That 20 shares will now be performed part of the 100 shares that will be issued. So it means that anybody that subscribed to that shares will be part of the owners of the company, and that's a form of equity. And so the entity receive cash from the issue. So when we issue our shares, people purchase, subscribe to it, then the amount they receive is what will now be part of the cash. If they pay money into the bank account will increase. So the double entry for that is actually what the equity and the bank account. So now, whenever we issue shares, two things actually involved. We have what we call the issue shares, and we have what we call the nominal value. Now, the issue shares and nominal value. The issue share is the new equity. Is always higher. When you issue a share, when people are subscribing to it, it's always higher than what than normal or face value. Face value or normal value is the value that income or share of profit are being computed on. Is the one that is used to what any profit or anything that they want to share. They normally use what face value to what to share that. But nominal, which is the issue price, is the one that market rate, which we purchase it. Most of the time, it's always higher. So the difference between the issue price and the face value is what we call the premium. Now, the share premium is actually what it serves as the difference between the nominal value and the share and issued price. So, like for example, I issued a price of a share of, let's say, 2 naira, and the face value is 1 naira. Okay, that would be a little bit confusing. Let's say I issued a share of 2 naira, and face value is 1.5. That's 1 naira and 50 kobo. Then it means that the accounting entry is this: my cash received. So I'm going to what debit my cash with the total amount of money collected. Then I will credit my my share account, my nominal share account with 1.5 times the number of shares I sold. Then the 2 naira, which is the issue price, minus the 1.5, which is the face value, will give us 0.5, which is 50 kobo. That 50 kobo times the issue will now be credited to our share premium account. It will be credited to our share premium account. This is what I have explained, the double entry. Now, what that means that whenever we make sales of shares, our bank receives, so we debit the total amount of money into the bank account. Now, when we are done with that, we look at it. Is the issue price and the face value are they the same? If they are different, the face value, we multiply the amount of the face value times the issue that the total shares issued. The amount will be credited to the share capital for nominal value. Then the difference between the issue price and the face value or nominal price will now be credited to the share premium. Okay. Let's go further. You see an example as we move forward. So transaction costing. We have our issue also here, transaction costing of issue new shares. When you issue a new shares as well, you incur some transaction to issue such shares. So what do you do when you incur some transaction when you issue such shares? Is that you are expected to reduce your share premium with your transaction cost. You expect to reduce your share premium with your transaction cost. But in case you don't have share premium account, maybe there's no existing share premium, then that transaction cost will be used to reduce your retained earnings. So if your share premium account occurs, you're going to use to reduce your share premium by debiting the account. But if there is no share premium, then you are going to use it to reduce your retained earnings by debiting the retained earnings. So the double entry for transaction cost is actually what the bank is giving. So you credit the bank, then you debit the share premium or share or retained earnings. So let's look at an example for that. Example. A company issues 200,000 shares or 25 naira each at a price of 250 per share. Issue cost at 3 million. Now, the nominal value for this share is 25 naira, but they issue it at what? As 250 per share. It means that what? The issue price is different from the nominal value. And once the issue price is different from the nominal value, there's what? There will be a raise to share premium. Now, what is the total amount we receive? The total amount of money that we receive is going to be the total amount of money that we receive is going to be 200,000 shares times 250. So it's going to be 300,000 shares times 250. So once we are done with that, then that total amount is the one that we are going to debit or debit your cash or bank account because money is coming in. So you are going to what? You are going to debit your cash or bank account. Now, 250 times, now let's bring our calculator out and see that. So we have 250,000, which is the naira, 250 naira times 200,000. That gives us a total of 50 million. So the total amount of money that we have generated when we issue the shares is what? Is 50 million. So we debit our cash account. Then we now ask, okay, we have share capital and share premium to what? To now recognize with. What is the value that will go to our share capital? The value that will go to our share capital will now be the 25 naira, which is the nominal price, times the 200,000. So there will now be 200,000 of shares, that's shares, times 25. That will give us what? 5 million. So we credit 5 million. Now, the difference between the 250,000, 250 naira, and 25 naira will now be the share premium price. Now, that share premium price will now be 250 minus 25, will give us 225. It means that what the share premium price is 225. Then multiply it with what? With the total shares that was sold, which is times 200,000. That gives us a total of 45 million. 45 million. So that's what we did here. So we credit that also to 25 million. That's what we did here. 25 million. Now, after we have done that, the next thing that we now look to go that they say that there's issue cost. For us to actually what? Generate the 50 million that we generated from issue of shares, we actually incur cost of 3 million. And what is the transaction? What is the double entry for the 3 million? The person that is receiving it is what? Is the share premium. So we are going to use that 3 million to reduce our share premium. And we are going to use what? We are going to use that amount of money to reduce our cash by crediting cash account. Because cash is given now. It's an expense on cash. So we are going to use to reduce the cash account. Then we are going to use what? To debit, or also to reduce the share premium by what? By debiting that account. Assuming there is no existence of share premium account, then we are going to use it to reduce retain earnings account. They can ask you this in your objective on how to treat issues of shares. Now, that's that about that. So let's look at an example. If you remember, we have been doing with lots of additional information, final account, where we talk about the bad debts, we talk about depreciation, we talk about end and unearned income, we talk about accrued and prepayment. Now, these are the things that we have talked about. Now we need them to now bring it together to now to form a question. This is an examinable question. This is what they can ask you to solve in your exam as well as your 40 marks or I think 20 marks. Yeah, you can actually give you something like this and solve it for 20 marks. Now let's look at question 1. So we treat question 1, question 2, question 3 as times permit. The following trial balance was extracted from the books of Ayomi at the close of business on 31st July 2018. So they give us trial balance. The trial balance consists of what? The balancing ledgers, the one they have done double entry transaction on. You are required prepare what? You are required to prepare profit or loss accounts for the year ended 31st July 2018 and statement of financial position as at that date. So you are expected to what? To prepare it as at that date. Now, give effect to the following adjustment. So they gave us an adjustment. You know, I told you that when we are preparing our financial statement, there's another thing that we normally call what? We normally call it adjusted trial balance. So what they have given us is they have given us a trial balance. We are now expected to what? To now adjust that trial balance. Then after we are done with the adjustment of trial balance, we now prepare the profit or loss account, and also for the statement of financial position. So let's start with the additional information. Stock 31st July 2018 is what? 4,290. Now, before we go into this solution, or before we finish reading the question, there are two ways that we can prepare our financial statement. Number one, the first one is You can either have in the examination, or you need to take your time to read through. Then you read through the additional information as well, so that you can give an idea of the item that will be adjusted in your trial balance. Then you can now firstly solve the additional information. Once you are done with the additional information, then you can now effect what you have find out in the additional information on the trial balance. Or you can just open everything. That the second method is open everything method, which means you are going to open your statement of financial performance, statement of financial position first. You're going to open everything first. Then you now input the figures or the transaction that does not require adjustment. You put figures that does not require adjustment. Then you now start solving the adjusted figure. Once you are done, you now impose your adjusted figure. The first method is to start with your additional information. Then you adjust it on your question paper, plus, minus, plus, minus. Then you reflect it on your financial statement. The second method is that you first of all open your financial statement, post all items that does not require adjustment, then you go back to your additional information. The second one is actually okay. That's if you are not good with time management, it helps you that even though you're unable to finish it, you still get mark in your posting. But if you are not too conversant, or you have not prepared very well, you might not know the additional information, or you might not know how the additional information affects some figures in the trial balance. So that's why some people prefer they actually solve the additional information first before they prepare the financial statement. So you have to pick what works for you. But the method that we are going to use now is that we're going to first of all solve the additional information. We know the figure that will be adjusted on our trial balance before we now go ahead and prepare the statement. So back to the additional information of question 1. It says stock. Additional information 1 says stock 31st July 2018 was what? 4,290. Now this 4,290, it means that 4,290, this means that the closing figure or the closing balance as at the end of July 2018 is that they have 4,290. And we said under AS2 that the accounting treatment for closing information is what? You debit the profit or loss account, then you credit the what? The second leg goes to your statement of financial position under your current asset. So it affects your statement of profit or loss. It affects your statement of financial position. These are the two items, two statements that it affects. Then under wages and salary accrued at 31st July 2018. It accrued at what? 31st July 2018, and the amount is 210. Office expenses owing of what? 810. 810. I believe we have a question with you at the moment. So let's go to workings. Let's see. So what we are trying to work out is this. Wages and salary accrued. Accrued in the sense that we have enjoyed the services of people that render service to us in one way or the other, but we are yet to pay. Remember under when we did accrue and prepayment calculation, it was there we discovered that accrued and prepayment calculation is actually very, very important. So you come back here. Let me show you how you do that. So this is what we are talking about. Sorry. So what is the figure for wages and salary? If you look at trial balance, you have wages and salary, yeah, to be 8,940. Now that 8,940 is the actual amount paid. So we bring it down here, 8,000. 8,940 plus the amount that we have not paid for, which is what the one that was accrued as what 210 as 210. So we come back here plus 210. Now when you plus it plus 210, so you do plus 210. So excuse me. And that will give us what? If we press the calculator, that will give us 8,940 plus 210. That will give us 9,150. 9,150. That's one way to do it. Another way to do it is to what? To show it in your what? In your financial position statement. But the best way is what? To do it this way. So I'm going to show you this way method. I'm going to show you the second method as well. Now, if you want to move further, please don't do all this method in your exam. These workings that I've done for you is okay. But for the purpose of understanding, that's why I want to move to the next one now. Please, I repeat myself. One is this is okay. So, but for better understanding, you can also use this if you prefer. So we have wages and salary account. Now the balance brought down for this is what is an expense. So we have balance brought down. And the amount that we have is 8,940. Now, there's amount that they have not paid for but have enjoyed. So we have to add it. So how do we add it? We come here and put accrued. If you remember, the one paid, we put accrued, our put was 210. Then the second leg have to go to accrued account. So we come here and put what? Accrued account. We put wages, accrued, wages, and salary. So let's leave it like that. So if the second leg will now come to our credit side here, we have what? Expenses, wages and salary or expense. Wages and salary expense. And that will give us what? 210. We are done with what? The additional information for that. So we move to the next one. It says, the next one says that office expenses owing. They are still owing office expense of what? Of 810. And the expense towards in trial balance is 450. So when if that's the case, you come back here and put what? Office expenses. Like I said, it's just for the purpose of this class. I'm explaining this. In the exam, you don't need to write all this. I'm sorry, you need to use two formulas. This, what I'm doing right now, is enough for you in the exam. You don't need to use this and again use T format to solve the question. So the one that we have is based on the question. What we have there is 450. We have 450 and 810. So come back here, 450 from trial balance plus the amount owing, which is what? 810. So the total amount that we have is what? That's 450 plus 810. That will give us what? 1,250, 1,260. Now, 1,260 is the figure that we show in our, is that 1,260 figure that we will show in our profit or loss account. Why the other one, which is 810, is one that's going to show in our statement of financial position. So let me show you the way you will do it under your T format. So if you are doing it under your T format, so you have here office expenses. Because you want to adjust it, you bring it down. So how do you bring it down? You say balance brought down. The balance brought down is what? Is 450. That's brought down. We are adding to it accrued. So we have accrued here. How much is the amount that's accrued that is owing? Is 810. So the figure, if you want to close this account now, office. Assuming I'm in the exam, okay, let's continue. Let's continue. So we have it here. Second leg is going to come to where? So accrued office expenses. So we're around that. So I have that for what? For my accrued. So the next thing there, I will now become here to put what? Office expenses. And the amount is what? Is 810. So it means I'm done with what? With that additional information given to me. Additional information given to me. So I come back to the question. Going forward, I might not be showing you the question. I believe, like I said in the last class, please always have your question with you, and also the other system that you are using to screen also should be with you as well. So then if you look at the third adjustment that we have here, it says that rent be paid at 31st July 2010 is 180. So prepayment of rent is what? Is an asset. It means that you have paid the rent in advance and you are yet to enjoy it. But for our statement of financial performance, what we need at that moment is what we have enjoyed and what we have spent for that year, for that period. Since we have not enjoyed the rent that we have paid in advance, and if the amount in trial balance, the rent in trial balance have actually captured the totality of it. So we need to remove the element of the what? Prepaid rent, the rent that we have not enjoyed. We need to remove it, deduct it, so that it can show us the total rent that we have consumed for that period. Because matching concept is that what? This is the rent that we have incurred to generate this revenue. So as the rent here, prepaid rent is 180. Now the rent in trial balance. Where is the rent in trial balance? Okay, we have rent and insurance. So we have this to be what? 1,740. So we have that to be 1,740. So let's come down here and solve. One way of doing it is by what? Coming here and we put rent and what? Insurance. The amount in trial balance is 7,470. 7,470. Why the one that we have in, sorry, excuse me, a minute, please. Why do we have the one that we have in additional information is what? So that we will slow down because we have a lot to do. So I'm getting the second gadget, the question, to look at the question, okay? So the second one is what? 180. So the additional information says that we are what? We have not enjoyed a value of 180. So we remove the value that we enjoy. Now, if you do that, that would now be what? 1,740 minus 180. And that gives us 1,560. So if you want to do your T format, like I said, I keep repeating, don't do the two. Just pick one. They will not penalize you. So you come down here to the T format and put rent. Rent and insurance. Now the balance is an expense account, so it have what? The debit balance. So we have balance brought down. What is the rent? That's 1,740. Then we want to reduce it. So we take it to the other side because it's what is prepayment. So we have what? Prepayment. That's advance, amount paid in advance. How much do we prepay? That's what? 180. Then we go to what? The second leg we have to open prepayment account. So we have rent and insurance. So let's keep the insurance short. Okay. So if the under the rent and insurance account, prepayment is what? Okay, this one should be prepayment. So it should start with prepayment. prepayment. So we have that. So, and remember, is what is current asset. Prepayment is what is current asset. So we come down to the debit side, and we have what? Rent. Rent and insurance. Let's keep that short. Okay, since it's giving us option. Now, rent and insurance is what is 180. We have drawn the what? The double entry for that. So moving back to the question says that, okay, we have increase in provision for bad debt, increase in provision for bad and doubtful debt by what? By 150 to 1810. So we are increasing it by 150. When we did adjustment under provision for bad debt, that is the increase and the decrease is the figure of that increase and decrease that we have first statement of financial performance. It's not the balance on the provisional account, but is the what is the increase and decrease that will affect our statement of financial performance. And I said that you can either display it as what on your, you can either display that increase in provision for doubtful debt on your statement of financial performance, or you can take it to your bad debt account and what and add it up. It depends on the way you want to solve it. So on the way you want to solve it. So let's go. Since there's no bad debt in our question, we use the method, the first method that I explained. So keeping in mind that it increased. How does it increase? If you look at our provision for bad debt in our trial balance, our provision for bad debt in trial balance is 660. But they're saying that at the end of the year, they now make sure that what? That our provision for bad debt is now be 810. So 810 minus 660 will give us 150, which means it increased by 150. So we have made provision of 660 before. Then it means that what? We need to increase it by 150. So if you want that, you can come down here and put provision for bad doubtful debt. That's the full meaning of BDD, bad doubtful debt. Okay, so we have that to be, before it was 810, assuming it was not given, the final it was now 8650, and that will give us as it was a result of what? 150. Let's do the T format. Let's see how the T format works out. So under the T format, we have it here. So we have the provision for, now this is, it has a credit balance, BD, and that credit balance is what? 660. They now told us that it's going to what? It's going to increase. So this figure is balance sheet figure, which is statement of financial position figure. So we now come here. You can either what? Create bad debt account. If you don't need it, you can create provision for BDD. So you can call this one, expense account. So let's bracket this one and put it as expense account. Expense account. So if it's an expense account, then the second, now we are increasing it. Once we are increasing it by 150, it means that we are increasing it, then it means that we are going to what? Increase it by 150. Then we are going to have what? Balance carry down. So if we come here, we have here to be okay. So let's have this to be what? To be provision of what? Doubtful debt. That will be what? 150. So we have this to be 150 because then this one will be what? Will be the expense, the provision will be what? Provision, that's the liability that is coming from, will be 150. So we have done the double entry for that. So now let's go on to back to the question. Let's see what the question says. Now the last one says that what? Provide for depreciation as follows: fixture fittings and furniture fittings, fixtures and fittings is what 120. Why the delivery fund is what is 500. So I'm telling you that depreciation, that the two depreciation is this: for fittings and furniture 120, delivery fund 500, and the accounting entry is that it's going to affect our what? It's going to affect our statement of financial position. At the same time as well, it's going to appear as value to reduce the cost of assets. That's a double entry for that. Now, once we are done with that, and if you remember as well, under the IAS 16, when we did talk about depreciation, we mentioned that there are two ways. If there is what we call accumulated depreciation or provision for depreciation, the depreciation is going to affect these two accounts: depreciation account and accumulated depreciation account, which means the asset account will remain unchanged. The accumulated depreciation account and the depreciation account that will change over time. They will not say that if the company are not using accumulated depreciation, then it means that the asset account will change over time, which means the depreciation for the year will always affect the asset account. At the same time, it will affect the depreciation account. Now that we are done with the additional information for this question one, the next thing for us now to close our T format. So let's close our T. Let's close our account, T account. Let's close our T account. Now this is our T account. Wages and salary account, they are expense account. So we close it to what? To profit or loss account. Expense account are close to profit or loss account. So we have P or L. Now 8,940 plus 210 will give us a total of 9,150. That's the value that is going to represent under our P on L. So we close it 9,150. We close this place also. So let's close this place 9,150. We have closed this place. Now looking at this place, the credit side is bigger than what? Than the debit side, but it's a liability. So the liability account have what? It's continue. Balance carry down. Expense account, income account are written off to profit or loss account. Liability account, asset account, equity account have balance carried down because we are going to use that figure in the next year. So we have this to be what? 210. So which means the two of them are now balanced. You are good to go. Then this figure also. Now this one, office expense is an expense. So what do? We add this together. So which means 450 plus 810. That gives us 1,260. So it means that what? The balance here will be 1,260. This one is going to give us 1,260. Now we come here. This is what? This is a liability account. So we have balance carried down. 810. So we have closed that account. So we move to the next. This account is what? Is an expense account. So we close it to what? Profit or loss account. So we have this. So the difference here will not be profit or loss account. Now 170, it will not be. How do we balance these two accounts? 1,740 minus 80. That gives us, it means that this balance we need here is 1,560. Now add it together, give us 1,740. 1,740. So once we are done with that, we move to what? We move down here. Prepayment. Prepayment is an asset account. So we have balance carried down there. Balance carried down. Now, if we have a balance carried down, it's what 180. So we are good to go. Provision for bad doubtful debt is what is an asset account as well. So what do you do under this one? You close it up. How do you close it up? We now say balance carried down. We have balance carried down. And that will be addition of these two will give us 660 plus 150. Like I said, it's not advisable for us to use this in exam because it was the consume time. But if it's what works for you to have a proper financial statement, please use it. So the other side here would have be what? This one is an expense account, so it's written off to profit or loss account, and which is 150. Then what we are done with our additional information. The next thing for us is now to start posting. So let's go back to the question. So we now go back to the question and start picking it one after the other. So we have purchases and sales. Now, purchases and sales, there's no additional information on that. So the first we can post, we can go ahead and post that. So we come down to our profit or loss account. Our profit or loss account. And we post purchase and credit. Now, anytime you see something like this, purchase and credit, it means that two things are involved there. The purchase, the figure on the debit side is for the purchase, while the figure on the credit side is what it's for the sales, because income is what have credit balance, while expenses have debit balance. So we come back here and put purchases, yeah, add purchases. So we have 22, 860. So we go to where we have purchase sales, and the value for sales is what? This value for sales is 41 970. 970. That's value for sales. Once we are done with that, we move to the second one, stock. At the what? They say 1st August 2017. 1st August 2017, the stock. So at that moment, 2017, it means that it's an opening stock. So we come back and put here opening stock. And that is what? 5,160. An opening stock. The second one says that capital. Capital 1st August 2017. Capital is an item that will be found under statement of financial position. Statement of financial position under what? Under the what we know as balance sheet before. So we have our what? Our capital. So what is the figure for capital that we have? We have the capital to be 7,200. We have to be 7,200. After that, we have bank overdraft. Bank overdraft is an example of current liability. Current liability. So we have bank overdraft. We put it there of what? 4,350. The other one that we have there, we have cash. Cash is current assets. Cash is the current asset figure. So we put cash to be 90. Then after that, what we have? We have discount. Now the discount that we have, they are on the same line. So we don't now, it's now left for you to be able to ascertain the discount received and the discount allowed. Discount allowed is an expenses because it's used to reduce the cost, the sales, or the cost or the profit of what of the company. So discount allowed is an expenses, while discount received is an income. And I said an income is always fine on what? On the credit side, while discount allowed is always fine on the what? On the debit side. So, and this account, their expenses and their income. Expense and income are always found under statement of financial performance. So we go to our statement of financial performance and put what? So we come down here and look for. Normally, you're not expected to see all this, but because we have saw it before deleting it, that's why we can see all this information. So now let's do that. So this can allow. So this can allow is what is on the debit side. So the amount is 1,440. While the one for discount receive is on the what? On the credit side, and that will be 930. 930. So let's go for returns. Now, returns as well. We have return inward, we have return outward. It's possible that they can actually put this also on the same line. It's not left for you to work and identify the one that is return inward and the one that is return outward. Return inward, these are the goods that have been initially sold but returned back to the what? To the company. So that's the return inward. And return inward is used to reduce the sales value in our statement of statement of financial performance, which is profit or loss account. So this return inward is always found on the debit column. Return inward is always found on the what? On the debit column, because it's used to reduce sales. So it's always found on the debit column. Why the one on the credit column is what? Is return outward. Return outward are the goods that we have returned to what? To a vendor due to one reason or the other. So our return inward is what? If we check that, our return inward will now be what? 810. Our return inward will be 810 because I expect to what? To reduce it. Though our return outward is what? 570. Return outward 570. 570. Return outward is going to be 570. Now that we are able to identify that, now we move to the next one. The next one is carriage outward. What is carriage outward? Carriage outward is actually what? This is the amount of money that we incur in taking goods from the company to the necessary place. Is what is carriage outward is the amount that we incur on carriage, pay delivery to customer, taking it to another warehouse, and the rest. These are carriage outward. Assuming we have carriage inward, I think there's a question that have carriage inward. We should go further. That carriage inward will be used to what will be added to our purchases because it will be part of what? Cost of our stock according to IAS2 inventory that says that every cost that we incur from the purchase of the inventory down to the point where it is needed will be added together, and this is the total amount of money that will be used to value our stock in our financial statement. So we have carried inward will be added to your purchases, but carried outward is an expenses, so it will be used to reduce your profits. So we come back here and put carried outward. Yes, carried outward. Okay, so we have carried outward here. And what is the figure? The figure is 2,160. Then after that, we have rent and what? Rent and insurance. Remember, we have what? We have made adjustment on rent and insurance. So we cannot what? We cannot just pick that rent and insurance and what? And put it here. We must do the adjustment. But looking at this place, the adjustment have been here. But the one I'm going to work for you next, you're not going to see it here. Okay? You are going to see the beauty of the adjustment later. So the one that you're going to solve next, there's no, in fact, nothing written. So it will be a fresh page. But to save time, so let's put it there. So our wages and salary is what? Our wages and salary from the trial balance is 1,740. Then our accrued is what? Our accrued is 210. Now, if we add these two together, it will give us a total sum of 9,150. That's what we got in our additional information. And that's what we got in our additional information. So we move to the next one. I want trial balance. So we move to the next one. Provision for bad and doubtful debt. Now, provision for bad and doubtful debt. There's additional information for that, for provision of doubtful debt. So what do we do here is that we go to the place here, increase. Can you see the increase there? So we have that. So the new one given to us is 810. Why the old one is what? 660. The difference is going to give us what we call the 150 that we are talking about. Now this second leg is going to come under the. Okay, I didn't. Okay, let me explain it first. So this second leg, because additional information we must do transaction or what? Additional information. There must be debit and credit on additional information. Additional information means that what? That accounting transaction have not been done on it. So when you are posting it, it's meant to have two legs, which means the debit side and the credit side. Since we have done the provision transaction increase of 150, we expect to make effective. We need to do the second leg. So we come back here and put here under the statement of financial position, because the provision is meant to reduce our debtors or trade receivables. Please, you can trade receivables under IF1, debtors on the old part. Okay. So with that, that will now be 810 balance 810.
So that's it. Initially, we have done one transaction that required additional information, which is rent and insurance. Now that rent and insurance, the second leg of that rent and insurance is expected to what? To be carried out. So we look here and look at our rent and insurance. It's a prepaid, like I explained earlier. They are prepaid. So we are expected to what? To do the second leg here. So the prepaid is what? Is 180. 180. 180. So I skipped that. This it was when I was doing my position of what doubtful debt that I remembered. So I skipped that. So that I'm calling your attention to it now. So even though I'm not calling your attention to it, at the end of the day, I will look at what would the additional information that I've solved and the one I have not treated, the one I've treated and the one I've not treated. So if we look at the next one that we have on our trial balance is fittings and fixtures and what and fittings. So we have fittings F and F. So we come down to our what? To our statement of financial performance. That's what? That's non-current asset, non-current asset. Now the cost of it is 1,200. They gave us the cost, which is 1,200. For the delivery van, is found under equipment. That delivery van is what? Is 2,100. 2,100. That's delivery van 2,100. That's under equipment. Or better still, if you want that, we can actually put this, rename it. We can, if you want, for better understanding, so you get convinced, we can put delivery. We can just put van there. Motor van. So that's what 2,100. So let's move forward. We have debtors and creditors, trade payables and trade receivables. They are item of statement of financial position. You need to know the item. You need to know where and where to post all these items. Okay, they are very, very important. So under that, under the debtors and creditors, they are item for statement of financial position. So we come back under the debtors. What is the figures for debtors? These current asset. Trade receivables are what? Are current asset. What is the figure that is given to us on the trial balance? We have that to be 11,019. If you look at them, they're on the same line. And the like I said, current asset have a debit balance. So we pick it. Then we know that the second leg we go to where the other one, which is creditor, we go to the current liability section and go to current liability as well, 6,060. Now we move further. Drawings. Drawings is an item, is personal withdrawal, is personal consumption. It means the owner of the business is taking the product for himself alone. It can be cash, it can be stock, it can be asset. It means that what you are taking it non-current asset. It means you are taking it away from the company for your personal use, not for the company use. That's drawings. So, and if it's drawings, which means that what you are taking out of your capital. So you are taking out of what you have invested before. So that's why it's used to reduce the equity of the what? Of the ownership. So it's also an item of statement of financial position. And that figure is given to us is what? The figure given to us is 2,880. Then after that, we have wages and salary. Yeah, this wages and salary is an expenses, right? So we have here wages and salary. So we come to click wages and salary. Where is wages and salary? So we come down, look, okay, wages and salary. We have no wages and salary. So there's a mix up here. Okay, okay. It's a mix up here. Wages, we put the rent and insurance on wages and salary column. So well, let's just correct that on time. So we have 210, 9,150. So let's delete this. They are not for wages and salary. So let's come here. Okay. Now that we have done that, so we have wages and salary. What is our wages and salary on our trial balance? The one we have is 8,940. 8,940. And what is our accrued? Our accrued is what? 210. It should be 180. 180, sorry. 180. This should be addition of that should be go 1,560. Okay, I think that should be correct. Okay, so now if we add 8,940 plus 210, it will give us 9,150. Request the calculator, we give you 9,150. So, and the second leg for accrued is going to find under what? And accrued is current liability. So we're going to find under statement of financial position. So we come back here and put, okay, accrued. Can you see accrued wages and salary? So we have that to be 210. Accrued wages and salary. So we look at the next information that we have on our trial balance is office expenses. So with office expenses, that's an expenses. Can you see that's the last thing we have on our trial balance, office expenses, and that's 450. So we come back here and put office expenses to be 450, but there's accrued of it, an accrued of how much? An accrued of 810. So put 810. The addition of these two will give us what? 1,260. Now, if that's the case, we have to come down to where? To the second leg for that accrued, it now be a year, which is what? 810. 810. So now, once we are done with all that, there are some additional information that we have not treated that is not present in our trial balance, but we have not treated it. The first one is the stock. And I said that the stock have what? Two positions, two places that we work on it. On the statement, you can find on the statement of financial performance, profit or loss, or statement of what? Financial position, balance sheet. And I said that under it can be used to what? Under the statement of profit or loss, it can be used to what? To reduce our cost of goods available for sale so that we can get our cost of goods sold. So we have our closing stock there to be 4,290. Then we go to our financial position. Under current assets, we now have what? 4,290 under current assets. The other one that we have not prepared or that we have not done the accounting entry for is our depreciation. Our depreciation have to account as well. It affects the statement of financial performance. At the same time, it affects the statement of financial position. So how does it affect the statement of financial performance? It affects it by reducing what? By reducing the profit of the organization. So we come down to the depreciation area. What is the depreciation for furniture and fittings? We have it there to be 120, and for the one for what? For delivery van is given to us, so we didn't calculate it, is 500. Addition of these two together will give us what? 620. Now that we have done that, we now need to do the second leg on our what? On our statement of financial performance for our position. Like I said, it's always two legs. Additional information is always what? Two legs. So on fittings and furnitures, fittings will now be what? That will be the adjustment will be for this one is 120. Why this one is 500? Deliver van is 500. So now we have posted everything that we need to post. So the next thing was not start pressing our calculator. So we start from the other side to get our what? Our total cost of goods available for sales. So we start with our opening stock, which is 5,160 plus 2,860. That give us a total sum of 28,020. Now, if we less it plus 570, that give us a sum of what? 450. That's 27,450. Now, if we have that, so the next thing for us to now do is to now less our closing stock from it as well. So if we less our closing stock 4,290 from it, what will give us? It give us 23,160. What you give us 23,160. So we need to get our gross profit. How do we get our gross profit? It's cost of goods sales minus cost of goods sales to get our gross profit. So we need to know our net sales. So we come back to the other side and say, what is our net sales? That's 41,970 minus 810. That give us a total of 41,160. That's our net sales. Now that we have it here, we now use that amount to subtract from the word sales minus cost of goods sales, which is 41,160 minus 23,160, and that give us 18,000. Now, if we close this up, because we are using T format, if we close this up, this will give us what 1,160. If we come on the other side, it will also give us the same for 1,160. Now that we have done with that, we need to bring our gross profit that we have here, that we have derived from here. We need to bring it down. These are gross profit here that we have derived here. We need to bring it down to what? To this section. This is the old method that we call what? Trading profit and loss account. So the trading account ends when we derive our gross profit, while the profit account continues when we continues from the gross profit at ends when we derive our net profit. So we put our gross profit to be what? 18,000 here. After we have put our gross profit to be what? To be 18,000, we now do the addition of all figures that we have here. If you press your calculator and you do addition of all figures that you have on the what? Let's press calculator. If you look at the figure that we have 9,150 plus 1,260 plus 1,560 plus 150 plus 620. That gives us 12,740. Now, other side will give us 18,930. 18,930 is more than 12,740. It means that what? We have net profit. So how do we get net profit? Now be the amount, the total expenses minus the total income. So, and the total income is 18,930. And that gives us a profit of 6,190. It will give us a profit of what? 6,000. Okay. Let me put this one out. Are they add this together? Okay. So we add everything together here. Let's re-add it. We didn't add our carrying amount before. 9,150 plus 1,260 plus 1,560 plus 150 plus 620 plus 2,160. That's 14,900. 14,900 minus 18,930. It gives us 4,000. Okay. I think this method is not the best because of the misconception here. Okay, let's trace this out together. This 9,150 is wages and salary. This 1,260 is for office expenses. This 1,560 is for rent and insurance. This 1,440 is for discount allowed. 150 is for increase in provision. 620 is for depreciation. 2,160 is for carriage outward. Okay, so let's add. I think it should give us what I'm looking for. 9,150 plus 1,260 plus 1,560 plus 1,440 plus 150 plus 620 plus 2,160. That gives us 16,340 minus 18,930. That gives us 2,560, which is the net profit is what? 2,560. 590. 2,590. So that will be your net profit. So addition of everything together will give us 18,930. So we come back here and put what? 18,930. Now, once we have done with that, there's a link between the profit or loss account and statement of financial position. So the link here is what is the net profit. So we bring down the net profit down to where? Down to the statement of financial position under equity. So we add it up. Assuming it's loss, we are going to reduce it. But since it's profit, we add it up. And what is the profit? 2,590. So addition of these two will give us a total sum of 9,790. Now, if we have 9,790 plus drawings, it will give us what? 9,790 for drawings will give us the closing capital, which is 6,910. If you press the calculator, it will give you that. Once we are on the left-hand side of what statement of financial position now. Now we need to add up all our current liability. So we add up all our current liability. So we have 60. It's better you press your calculator now so that you can understand the way we are getting this figure. And also 4,350. That gives us 11,000. So our total liability is 11,430. So 11,430 plus 6,910 will give us a total of 18,000. 18,000. This will give us a total of 18,340. Now that we have 18,340 on that side, we need to come to the other side and do our computation. So we have 1,2 under our non-current asset, 1,2 of what fittings and what fixtures. So we have 1,2 minus 120. That gives us 1,080. So after that we have 2,1 minus 500. That gives us 1,600. After we have that 1,600 plus 1,008, it gives us 2,680. Now we need to now add this together as well. So this one will give us, this one should give us 33. Why this one should give us 620. Now that we have our non-current asset, we now need to get our now that we have our non-current asset, we need to, let's take this out here. Let's bring it on the second column here. So the second column is now 4,290. That's the beauty of having different columns, so that we'll be able to see it at a glance. So under this one, before we can get our current asset, we need to remove the provision away from the word debtors. So we have 119190 minus 8,810. That will give us a total of 11 1100. 11,100. So 11,100 plus 4,290, which is this inventory plus 180, prepaid again plus 90. That will give us a total of 15,000. So our what we have is 15,000. So we have it to be 15,000. 660. That's our current asset. So our current asset plus our non-current asset, which is 2,008, will give us what? 18,000. 18,340. Sorry, 18,340. Now that 18,340 is what we have. We call it what? The total non-current asset that we have. Now, if you remember when we did the accounting equation, that I said that what accounting equation is what we call the asset equals liability plus equity. Now, if you look at the right-hand side of this statement of financial position, it contains asset. And asset is what we are talking about, non-current asset and non-current assets. So this one, non-current assets. So we are talking about non-current assets. Non-current asset and current asset. Addition together will give us total asset. Now the other side we have what? We have the equity. Equity side, which is the capital, the net profit, the retained earnings. That's the equity section. And we have what? Liabilities. We have current liability. We don't have. There's no long-term liabilities here. So these are what? The non-current liabilities. This is the bottom. Where the foundation of that accounting equation, which is asset equals liability, the left-hand side, plus the equity, that's the left-hand side. So that ought to be one for question one. Please, if you have any question on the way, kindly send me questions. Okay, you can use the chat room to send questions, please. So let's do question 2. If time will permit, if we cannot finish 8 on question 2, we shall continue from there next class. Okay, question 2. The following trial balance was extracted from the books of UHA Limited as at 31st December 2010. So these are the figure given to us. This is what was taken out. Okay, that's nice. So they give us trial balance. After giving us the trial balance, they then say that what the following information should be taken into account. The following information should be taken into account. What are the information that we need to be taken into account? Firstly, is that stock at 31st December 2010 was valued at 31,800. And I said there are 2 entries for that. One under cost of sales, which is found under statement of profit or loss account, and the second leg is found under current asset, which is statement of financial
position. Then another one that we have is accrued expenses at 31st 12 2010. We have salaries 1,800 and electricity of what 80. So we need to adjust for that. So let's adjust for that. So we go to our workings. So let's go to our workings. So let's go to the workings. Let's see. Okay. So these are our workings. So we start with workings one. Now workings one, if we look at the question says that accrued expenses on 31st, we are salary. Salary is first, so we have accrued expenses on salary to be 1,800. Now, if we look at our trial balance, we have salaries on our trial balance to be what? To be 40,600. So we have that to be 40,600. So we have salaries equals 40,600 minus, okay, plus rather, so it's an accrued plus, we are adding to it, which benefit that they enjoy, but they have not paid 1,800. 1,800. Now, if you press your calculator, the difference of that, we give the addition of that, we give us what? That's 40,600. 40,600 plus 1,800. That gives us 42,400. Now we have 42,400. Let's look at it in T format, if that will help you understand better. So we have this, because the truth of the matter is, if we actually do this like this, we need to interpret it. If I want to interpret this my workings, it means that 42,400 will be what will be shown under my profit or loss account. 1,800 will be shown under my statement of financial position as an accrued salary that I have not paid for under liability, current liability. So that's why I do show the T format for us to what to show to understand it very, very well. So we have our salary account first. Let's say our salaries account. So and it's an expense account, like I do say. So it's our balance brought down. And the amount there is what 40,600. That's the amount that we have on that account at that moment. So now I say that there's accrued on it. And I said accrued is what is added to it. Anytime you have a balance, a opening balance that is on the debit side, add it will be on the debit, on the debit side. So now this one, salary is one what accrued. So to get our actual salary, we need to what? We need to round it. We need to add up to the accrued. The service that we have enjoyed but we have not paid for, which is 1,800. Then it means that our second leg will now affect our accrued account, our accrued salary account. So once it affects our accrued salary account, then we can go ahead and do the second leg. Now that will now be on the what? On the credit side, and we now have salaries, which is the expenses for the amount 1,800. 1,800. So that's the workings. So it means that what can you see what I explained here is what we can see on this column. On this column is actually very, very important. Please, you need to know the calculation first. Then the second one says that we are still on the additional information too. It says that where salaries are one and electricity is what 80. So we are still owing electricity of what 80. So we come back here and put additional information 2. So we put electricity. What is that for electricity? We have to balance. The trial balance says that we have a 40,900. 40,900. Plus what? Because we are owing, so we are owing a total amount of what? 80 naira. We're owing a total of 80 naira. So if that is the case, the addition of these two will give us 14,000.
980. So our financial position will be showing what? 14,000. Our financial performance will be showing 14,980, while our will be showing 80 naira, 80 naira. So now let's continue with that. So let's do our additional information under the T format. So if you look at the T format, you put down here, okay, so we have this to be what? Let's put to be electricity account. So we have our balance carried down. Our balance brought down is what? Is 14,900. There's an accrued figure to it. So we have accrued figure to it. Accrued figure is what? Is 80. So we need to open an accrued electricity figure. So we have accrued electricity account. So once we have an accrued electricity account, we do the second leg here by putting electricity. Or how much? 80. So we put 80 here. Can you see it? So like I said, you what? If you know, if you are good in your T format, you can use T format. If you are not, if you are good in your mathematics, you can use this format. So after that, we go to under additional information. Our additional information 3 says that what prepaid expenses at 31st 12 2010 were insurance prepaid. Prepaid means that they have made the payment, but they have not enjoyed the value. They have made the payment, but they have not enjoyed it. So we'll come here and put additional information in three. Now we have insurance, insurance, insurance. Sorry, pardon me. Insurance. So what now insurance is what we have in our trial balance on our insurance. The one that we have in our trial balance is insurance is 6,800. 6,800. 6,800. Now, this is the total amount of money that we have paid for. But what we need that we want to show on our statement of profit or loss is to show the total of insurance that we have enjoyed for that period. Now they now told that there will be payment of what 400. So we need to remove 400 from it. Now once we remove 400 from it, it will give us 6,400. Now that 6,400 is the total insurance that we have benefited in that period. So if you want to use our TNT format here, you can come back here and put what insurance here, insurance account, insurance account here. So we have balance carried down. We have balance carried down. And balance carried down is what 6,800, right? 6,800. Okay. So now this 6,800 was it's not what we enjoyed. We are what we only enjoy 6,400. So which means that 400 is left for us to enjoy. We're going to enjoy that 400 in the next year. So without what payment, advance payment of what 400. Now it means that we need to now open prepayment account. So we now open prepayment insurance account. So once we open up prepayment insurance account, you know what we are doing here. We did what we credited it on the insurance account. So we are going to debit it here by saying what insurance account. Insurance. And what is the amount there? 400. Now that we are done with that, so we move to the next one. Say that we are still on the expenses. There is the prepayment of general expenses of 500. So we come back here and put number 4. That's number 4, general expenses. General expenses. We want to put it there. So what is the total figure for general expenses in the calculation? We have to be 34 under trial balance 34,800. If we look at your trial balance, so what is the total amount of money that we have not enjoyed? If you look at additional information, you see the total sum of what 500. That's 500. So once we enjoy that, so that will be 34,000 what 300. Yeah, 34,300. So our T format, you can come here and put the representative on our T format. So we are using two formats. This is how it's going to look like.
going to look like our general expense account. General expense. So we have general expense account. So we have the balance brought down. Once we have the balance brought down, the next thing for us to now do what? To put the figure there. What is the figure of that general balance? We have 34,800. We have 34,800. Now there's prepayment. So we have prepayment. It reduces it because that's not what we're going to see in our financial position. So it reduces it. So we have that to be what? From national information 500. So the second leg is for us to now put it on the what? On this side. So we come down this side. We have our prepayment of what? General expenses. Let's put it here, shorten that. So since we have credited that, we are going to debit this place with general expenses of how much? 500. So we are done with that additional information. So then I say adjust what the additional information for. If you look at it here, okay, let me show you. Okay, so if we look at this additional information given to us here, it says that adjust. Can you see here? So we're done with one, I've explained two, three, two, we're on the fifth one. This is what they have. Now it says that adjust provision for bad debt to what? To 2% of debtors and create provision for discounts allowed at what? 1% of debtors. 1% of debtors. Now remember, I said that provision, whenever there's an increase, is what? Debit is an expense. And I said before you can calculate discount provision on discount allowed, you must have removed your debt provision from it before you now calculate your discount allowed on the balancing figure. Please note that. And like I said, that in your ICAN material, it's not there. But for better understanding, and if you want to go for maybe you are going for an audit or interview, or probably you are doing another exam that is stated there, or in ICAN self can even test it. It will be very good for you to have that knowledge instead of you not having it at all. Okay, so now we need to do the provision for bad debt. So how do we do provision for bad debt? So let's go to our workings. So let's start with this. So we have this to be what? Okay, let's start with this. Sorry, excuse me. Let me take some water. Okay, thank you. So we have provision for bad doubtful debt. So the position for that bad doubtful debt is 2% of the debtors. So we have the 2%. So we have 2%. 2%. Times now, what is the debtor figure? If you look at your debtors or trade receivables, please. Debtors, trade receivables, they are the same. So if you see trade receivables, please know that is what. In fact, most of what you'll be seeing in your account is what your exam is trade receivables. So we have debtors to be 45,000 in your trial balance. If you look at your trial balance, it's 45,000. So the press calculator for this still will give us the total sum of what? That's 2.2%, 22% times 45,000. That it was 900. So our provision for bad debt at the end of the year is what is 900. But there's an increase in the sense that the one in the question given to us is 200. So 200 minus 900 will now be what? 700. So there's an increase of 700. Okay. So now let's look at the provision. Let's do trade provision. Provision for discount allowed. Now to deal to the division of the one as 1%, to deal with that,
to deal with that. So we have to hold less. That's desktop trade receivables or debtors first minus 900, which is what the provision that we have made. So it's the net debtors that you're going to find your provision for discount allowed on. So after you have that, that's is equals what? So we press a calculator. Let me say a calculator. So we press 45,000. 45,000 minus 900 times 0.01. That was 441. So which means our provision for discount allowed is what is 441. So now let's look at the double entry. Let's look at the double entry by using our T format. So let's see how it's going to affect. Here's our double entry by using T format. Now, if you look at the question now, there's existence of bad debt. The bad debt exists. So what we are going to start to, we're going to open our bad debt because we plan to what to write off our provision on our bad debt. We have our bad debt, so let's open our bad debt, our bad debt account. So after we over our bad debt account, let's bring the balance brought down here. The balance brought down. Now, once we have the balance brought down, what is our bad debt here? Our bad debt here is 400. Now they now ask us to what to make provision. So we have provision. So let's open our provision account. So we have provision account. Provision for bad debt. Okay, so we have that. And provision account, like I said, is what is a credit balance. So we have balance carried down, balance brought down to be what? To be 200. Now the total we should increase it. So how do we increase it? If you increase it by what? By 700. So our bad debt account is 700. But that's where we are increasing it to. So we debit our what? Our bad debt. So we debit our bad debt with our provision for BDD. So after that, we debit what our 700. We have done the accounting entry for that. So the second one that we need to do for also, it will now be what? Provision. The second one that we need to do is provision. So we do provision for, sorry, let me see. So we do provision for discount. So we do provision for discount allow. Now, once we do provision for discount allow, no, so we don't have anything at the moment. So we are just creating it, and the provision for discount allow as that what credit balance as well. So we have credit balance. You can write it off to your bad debt as well, but you can actually what open another provision account that will serve as expense account. So we have that. So let's open another one to serve as an expense account so we can reflect it too. So we can always see the two there. So we have to save time, let's just write it off to our bad debt. Let's put it under bad debt, provision for bad debt. So let's put under bad debt. So under this way, there's no opening balance. So we are going to have bad debt. So bad debt will not be 4. So under this place, we put so we have the word provision. We have provision for discounts allow. So what is provision for discount allow is 441. So we have done the accounting entry for the two. So we are good to go. So the next one for us to now look at the question again and look at what next to do. They say commission due but yet to be received at what? At 31st December amounted to what? Commission due. We have not received it. We are yet to receive it, but it's due for us to receive. That's end income. End income that we have not received. That's commission. Is earned income. So commission that we have earned. So we look at our trial balance. We have commission to about 1,200. And the one that we have earned that we have not received, we have earned it, so it will be plus 800 because it's for that period. So we have a plus 800. So that will give us a total of 12,000. So the double entry is going to affect our commission account, and at the same time, it's going to affect our end account.
which means that what they have not given us. So let's ignore that one so that we can be on a same page. So we have commission. So we have commission account. So it's an income. It's an income account. So it has what credit items than income account. So you have credit item balance carried down. And what's the amount there is 11,200. Now the one that what we have commission end. Commission end. So let's call it end commission. End commission. So which this one we have not what? We have not they have not paid us, but we have actually worked for it and we have received it. So it's an earned commission. So it's an asset onto us. So it's an asset onto us. What do? We debit it. So it's the money. So we debit it to put commission here. Commission. Now, as a commission account is one that is going to collect the second leg. So the second leg will be found under commission account. Of how much? If you look at the amount given to us, 800. So we come back to the credit side. And come back to the credit side and put end commission. So we have end commission to be what? To be 800. So we have done the entry for that. So we move further and say charge depreciation. So they ask us to charge depreciation on non-current asset. So we ask us to charge the depreciation. So let's charge depreciation. So depreciation for that will give us what? So we have two depreciation for this. We have first one, we have for furniture. So let's call it F and F. So that's to be what? 20%. So we have that to be 20%. 20% of what? 20% on cost. Now, what is the cost of furniture and features? So let's go to our trial balance. We go to our trial balance under the where is it? Let's search through. Okay. Now you can see it. Now furnitures are at cost is 2.5. Is 2.5. Furniture is 2.5. So you do 20%. That's 20% times 2.5 will give us total amount of 500. That's the depreciation. So we for motor vehicle as well, or as well as motor vehicle. Oh, okay. The second one is what? Motor vehicle. Also motor vehicle. Okay. So and motor vehicle is what? Is 10% on cost as well. So 10% on cost. What is the cost for motor vehicle? The cost for motor vehicle is 12,000 naira. So if the 12,000 naira, that's 10% of 12,000 give us, I think that should be 1,200 if I'm correct. Yeah, that's 1,200. So this is the what? This is the total cost that give us. Now, if you look at the information given to us, we have what we call we have provision for depreciation. We have provision for depreciation. So it means that the account is not what the depreciation will not affect. It means that the depreciation will not affect the assets. What's going to affect is that it's going to affect the depreciation account. It's going to affect depreciation account. So let's come here. So let's see depreciation. So we have depreciation account, depreciation account and expense account. So we have the depreciation account, and the second account that we are going to have here is we are going to have here provision or accumulated, or also known as what? Accumulated position for depreciation. It's also known as what? Accumulated depreciation. So we have the figure for what? For position for depreciation to do on the credit side, and that is what? Balance. That's balance. So okay, let's do for okay, let's do for which one comes first? Provision for motor vehicle. Okay, so let's do for motor vehicle first. So balance carry down, brought down. So the motor vehicle is how much? Motor vehicle is 4.5. If you look at your trial balance, you see there it's 4.5. Motor vehicle is 4.5. Then after that, you have your depreciation. So let's call this one motor vehicle depreciation. Motor vehicle. depreciation. Okay, now that we have called that motor vehicle depreciation, so we can call, so let's call this one as well. So this one, depreciation as well. So let's call this one depreciation. Okay, let's just put bracket MV. Okay, so that give us one forward depreciation as well. Okay, so let's go. Now that we have this, the next thing, so the depreciation that we have calculated, is what? That one give us a total sum of, let's look at it for the year. Under motor vehicle is 1.2. That's 1.2. So there's an increase of 1.2 here. So which means that we need to credit this place by what? Depreciation accounts. Credit this place with depreciation accounts of 1.2. One is 1,200. And debit depreciation account, motor vehicle depreciation account. That's provision for depreciation. So we have that to be what? 1,200. Now that we have this, so we need to do the same too for what's called, we need to do the same as well. So we are going to do the same. Okay, so we are going to do the same also for furnitures and fittings that is available. So let's do that for furniture. So I'll just delete some of these here. The figures, I'll delete the figures. So after I delete the figures, let me see. I'll delete the figures here. Okay. So now that I have this, so I'll change this to furnitures. So I'll just shorten it. I'll put F and F. So I'll put F and F. So that's the for that. So on this one as well, I'm going to put F and F as well. F and F. Okay, now that we have done that, so we need to look at what is the, under our trial balance, what is the balance for give us for F and the furnitures is 1,000. So our provision is 1,000, who we put 1,000 under the provision account, 1,000. The increment for the year, the one charge for the year, the depreciation charge for the year is what we call the, let me see. You have to charge one for the year. Mm, mm. I'm trying to locate the office. Okay, so okay, so I'm trying to this. So the other one that we have here, the depreciation given to us that we have solved for furniture and fittings, we have used the use 500. So we need to add 500 to it. So we have 500. So 100 here. So we have 500 here. So we have 500 here. So what we have done so far is we have just done the accounting equation for that. So now that we have done the accounting equation for that, the next thing for solving. So let's look at the additional information here. They say rent received in advance at 31st amounted to rent received in advance at 31st amounting to 4,200. So they said that they told us that they receive money in advance. Money in advance. It means that they are not yet a render, but they receive a total sum of 4,200. Please. Now, if you look at the the rent to receive, we have a rent to what, to 3,800, and they say rent to receive in advances. So that should be 420. Please, it's not 4,200. It should be 420. is 420. It means that out of the money, out of 3,800 that I have received, 420 is money rent in advance. So it should be 420. Okay, so now once we have created that, so we come back here and put additional information. So we have here to be what? To additional information, rent. So we have rent. So rent. So we have rent to be equals to. So what is the total rent to receive? 3,800. What is the one that is in advance? Well, the total one that is in advance is what? Is 424.2. Now, if you do that together, that's 38 minus 42 will give us a total of 3,380. Now, if you have 3,380, that's the total amount of money that we recognize. So let's show the accounting treatment for this one. Let's show the accounting treatment for this. So I will delete this. I will delete this. Let me see. Okay. So let me delete this. The reason why we're having this was it was copied down here. Okay, so let's delete that. So let's delete this as well. We are no need for us. So we don't need this as well. We don't need this table. Okay, so this name also we don't need it yet. Okay, so let's delete that as well. So let's delete this as well. Okay, now that we are done with that, so the next thing I want to do is rent. Rent and rent in advance. Rent in advance is what? Is our total amount of money that we have not enjoyed. We have not rendered the service. But you have not rendered the service, but you have actually what? But you have actually received it. You have not enjoyed the service, but you have actually what? Collected the money. So how do you calculate for that? So let's have rent here. So we have rent here. So after that we have here will be rent. So we have rent on N. This will be on N. On end rent. Okay, so when we have this, so we here. Okay, so what is the rent income is what is an income to us. So it's our balance brought down. Our balance brought down here is what we receive a total sum of 3,800. Now we receive a total sum of 3,800, but that amount of money is not what we actually receive. So what we actually receive is what we have to reduce it because we didn't render that amount of money as an income. We didn't render that service of 3,800. So we need to reduce it by 420 that we are here to work to reduce. So we have what on end income. So on end rent or end to now be a total sum of what 420 given to us. So this one we come here and put what the rent income, rent, and this one will now give us a total of what of 420. It means that what we have passed that account. So the next one that we have, the last additional information that we have in this figure, the last function that we have is one that is talked about the so one that we have here is what it talks about goods costing 1,200. We are taken by the owner for private use. Say, okay, goods costing 1,200. We are taken by what? By the owner of the private use. So what we expect to do here? What we expect to do here is that we expect to is a drawings is involved here. So what we do is that we're going to use to okay, let's see, let's solve it. Let's do the mathematical ones before we do that the other one. So we come here and put drawings. So let's put drawings here. So we have drawings. What is it? If you look at our balance, we have a drawings of, let's say we have a drawings of 14,100. Now that's drawings of 14,008. It now increase it because it took another drawings of what 1,200. That's another drawings. So if you look at it, the total year will now be the addition. So now we want 14,100 plus 1,200. That gives us a total of 15,300. That's the total drawings that have been done. So we look at the accounting on treatment equation here, the double entry aspect, it will now be drawing account. Now, if you have the drawing account here, we have the drawing account here, and the second leg, we're going to go to where it's affecting. The other where you're taking, I did taking from bank, or they are taking from goods. But under here, we have what goods costing. So they are taking it from stock. They're taking from stock accounts. That's where they are taking it from. They are taking it from the stock accounts. So you can put it here. So for us, you can just put cost of sales here. Cost of sales. Cost of sales. So now if you did that as the case, so drawings is actually what is a debit item. Drawing is a debit item. So we have balance brought down. We have balance brought down to be what 40,100. So once we have that to be 14,100, the next thing for us now is to what is to now do the adjustment for the increase. So once what is given, stock is given under cost of sales. The total purchase that they have purchased, we can also put purchase account there. It means that what the total item that have been purchased is one that is reducing. This is why I put cost of sales there, is because we are going to take it under cost of sales to reduce it. So that's what we are going to do. We are going to take the cost of sales to reduce it. So now let's go on. Let's continue. So we have that to be. So we have balance brought down. We have balance brought down here. So we want to increase it. So we put cost of sales. So we increasing it and put the cost of sales is what? What is the amount? 1 2. So we put 1 2. So the other one now what? On the credit side, we put drawings. Drawings is what is coming from the drawings account. That's 1 2. You see all what we are doing. You see the beauty when we are preparing our financial position and what our financial performance. That's where you are going to see the beauty. So if you look at it, I think that should be the last additional information given to us, the drawings. So we have posted the drawings and we have done that. So we are using your T format. The next thing for you now is now to close your T format, because the way you close your T format is very, very important. It will tell how it's going to affect your financial statement. Now, salary account, like I do say, expense accounts are close to profit or loss accounts, please. Expense account, income account are close to profit or loss account. Liability, equity, and what? Liability, equity, and asset have what balance carried down, because the what is expected to be carried over for the next year. So this is salary account. So we are going to close the profit or loss account. Looking at that, so addition of the two together, they give us a total sum of what? 40,600 plus 18 will give us 42,400. Now, if we have 42,400, the next for us, add it together. So you balance it what 42,400. So we have balanced it together. 42,400. So this one is an accrued. Is going to be what? Is expected to be balance carried out. Balance carried out. And that balance carried out is what? That's 1,200. So 1,200. So we have closed the account like that. So the next one for us is going to be the electricity. But electricity account is what is an expense account. So it's going to be written off to the profit or loss account. So addition of it is 14,980. So we have 14,980 to be written where? That's to the profit or loss account. Now, but on the other side, this one we what is an accrued. We have balance carried down, and that will be what 880, and that was going to show under our statement of financial position. Under our statement of financial position. Now to buy this one up, so we have 68, we have 400. So this place is greater. The left hand side is greater than the right hand side. So which means our profit or loss account will be on the what? On the right hand side, and that's the difference of 6,400. Now adding the two together will give us a total of 6,800. 6,800. Okay, 6,000. 6,800. This one give us 6,800 as well. So once we have that, so we need to close this as well. So how do we close this prepayment? So we have prepayment is what is an asset. So balance carried down. That's what that 400. Okay. So now we look at the other one. So this one in fact they can even put to just make it perfect, you can even put balance brought down here, which is the what 400. 400. If I put balance brought down 400, so we have balance brought down. On I put the expenses, electricity also balance brought down 800. Sorry, apologies. That's the wrong place on side. So we have balance. It will be on the other side, balance brought down of what 880. This one also it will be what balance brought down of what 80. 180. So now that we have that, so let's continue. We have the general expenses. So let's close our general expenses here. If you look at this, the general expenses, this is where we are right now. So if you look at general expenses, the left hand side, this side, the left hand side is bigger than the right hand side. So it means that what the balance figure will be here. So we have profit or loss account there. So the difference will be 34,300, and this is the figure that will be fed in your statement of profit or loss account. So we have that figure to be this 34,800. So what I'm doing is I'm just closing the ledger, nothing so special here. So I'm closing up the ledger. So this one will be what? This one will be balanced. This one will be balanced. Carry down, and this is 500. So after we have that, it will be balanced brought down. This should be balanced brought down. Balance brought down and be 500. So after we have that, so we scroll down. So we are still closing it. So bad debt now, we want to close bad debt. So how do we close bad debt? This side, we are going to close it down to what profit or loss account. So we're going to close it down to profit or loss is an expense account. So addition of the three will give us total sum of 400 plus 700 plus 401. That'll give us 1,541. After we have that, so we move to the other side. This provision for bad debt is what is like an SAO, is a balance sheet item. So we have balance carried down here. We have balance carried down here. So one balance carried down will now be what the balance 900. 900. So we have it here. You have 900. So we have 900 here. And that one we have 900 here. So if that's the case, then we have what we call the. So we have okay. Okay, so we have that. So this one also will not be. This one also will be the total sum of. This one, addition of all this will give us a total of 1,541. So this one also be what? The total sum of 1,500. So the balancing up here also will be a total sum of 1,500. So let's see, 1,541. Okay, so so this one will now be a total sum of balance brought down to be what? Okay, sorry, pardon me. 900. Okay, now that we have that, so we close this one off as well. So this one is just close this one. Simple balance carry it down to be what 441. After that, you do what call balance brought down of what 441, because it's going to be used to reduce your debtors account. So then for commission is that this one is worth more than this, so we are going to write it off to income. So it's what debit have 12,000. 12,000. So we have this one to be 12,000. So we have this to be 12,000 now. After that, we have this to be 12,000 as well. Okay, I believe you are following me. So this one will be an asset. So we have balance carried down here to be what 800. So on the other side, it's going to be balance brought down to be 800. So we close this one as well. Motor vehicle also, the depreciation is to profit and loss account. So we close that to be 112. So we close that to be 1, 2, 1, 2, 2, 1, 2. So for the accumulated depreciation, if we don't close it to profit or loss account, we say balance carried down because we are going to use it, the balance in the what in the pay next year, and that's the total form of 4, 5 plus 1, 2, 5, 7, 5, 7. This figure is what we're going to use to reduce our cost. This figure is what we're going to use to reduce our cost. 4, 5, 7, 2, 5, 7. So then we come to the other side as well. So we do the same thing here as well. So we have the balance carried down. So after that, we have 500. We have 500. So you can even have balance. Oh, sorry, that was a mistake. This should be written down to the profit or loss account is an expense. Is an expense. Profit or loss account is an expense. Is an expense. So we have that provision will not be in balance carried down over 5. As what we're going to use to reduce cost of the asset, cost of the asset, cost of the asset. Okay, so end cost, so end income. This is more than this, so we have to write it out. Profit or loss is an income. Profit or loss. So the difference there is what 32 minus 38 minus 32 will give us a total of 3,380. 380. So we have a 3,000 at 3,380. So which means the balance to about 3,000. We close that 3,800. 3,800. So we have this one to be what? We balance this one to be balance carried down because it's going to be opened again 420. So after that, we have that to be 420. So we can have our balance. Because we have closed this, we can have our balance carried down, brought down, to be what? 420. So now we have done what? We have done the accounting equation for that. We have posted all what we need to post. So now the next thing for us is now to start picking these figures and posting them into our word statement of profit or account, statement of financial position. So because of our time, I won't post this. I will expect you, I'll give an assignment right now, which I believe that you're going to do it. I'll give an assignment that you should complete this question. You complete this question. How do you complete this question? The next thing is just for you to now start picking one after the other. The way we did the first question, start picking that figure that you pick the one that does not have adjustment. You put it either profit or loss account or you put it on statement of financial position. The one that have adjustment, what do? You pick the one, you go to the adjustment where we adjusted it, then we put it and post it inside these two accounts that I talk about, inside these two accounts. So while you are done with that, we now what you just press your calculator, do the summation. Once you do all this, you are good to go. So I want you to do it. I want to see if you have any challenge, you can ask me for the class. If you ask me for the class, it almost save us time to watch. So when I'm preparing it, I'll just hit straight to the point. Also, so the next class we're going to complete this question, and I want also to review the revise the solution that we have done so far. So we're going to do this question. I'm going to do one more, and I'm going to close this topic. And the reason why I'm taking time to explain this topic is that I believe if you understand this topic, you'll be able to do a lot of things in account because account is one more is what possible. Like even if it will help you in other topics. Other topics like what level adjustment or correction of errors, it will help you under your partnership. It will help under preparing your sole proprietorship account. It will help you generally to actually know how to post, and it will help you to improve or assist you in understanding the rule of debit and credit. So if let me see if there are any question. There's no question on my chat. There's no question on my chat. So I believe I believe you understand it because if you don't understand it, I'm actually expecting question. But apart from that, also, if you still have question after this class, you can easily please just chat me or you have my number. My number is actually 07036649283. Or better still, you can also send your question to your WhatsApp group and it will be attended to. So what we have done so far, I think it's sufficient for you to you can start picking past questions and start solving past questions. I will advise you to start solving past questions now, so that when you start coming up with questions, instead of you waiting to the end of this time, because we are already, this is the fourth week, and that's the fourth week, we only have 4 weeks to go again. So please start solving past questions. And as time goes on, we are going to introduce past questions also. We solve the objective together, the OBJ, how they can ask it, and how you are able, how you should answer it to save time and the rest. So without further ado, I want to wish you a lovely night rest. I'll see you in my next class. Bye for now.